A person cannot just declare bankruptcy and then sort of have all of his debts miraculously vanish. Yes, bankruptcy can discharge, essentially get rid of certain types of debts, but not these debts.
A shocking claim surrounding one of boxing's richest icons has sent fans, critics, and financial experts into a heated debate. Reports suggesting Floyd Mayweather may have suffered a staggering $500 million financial setback have raised questions about the reality behind the headlines. But is this truly a story about a fortune disappearing? Or is there a much deeper explanation hidden beneath the numbers? From his legendary boxing career to his famous spending habits, Mayweather's relationship with money has always fascinated the public. Today, we uncover what sparked the controversy, what the reports actually reveal, and the surprising details many people overlooked. For decades, Floyd Mayweather built something that almost no athlete in history had been able to create, a name that became synonymous with money itself. Long before the world started debating his fortune, Mayweather understood that boxing was not just about winning fights. It was about controlling the spotlight, creating a brand, and turning every moment inside and outside the ring into an opportunity. When fans heard the nickname Money Mayweather, they didn't just think about a boxer. They thought about private jets, luxury cars, designer watches, million-dollar bets, and a lifestyle that seemed almost impossible to imagine. Mayweather carefully crafted an image of someone who had mastered the financial game just as much as he mastered boxing. But that image did not appear overnight. Born into a boxing family, Mayweather's early life was far removed from the extravagant world people associate with him today. Growing up in Grand Rapids, Michigan, he experienced financial struggles and watched his family deal with the realities of a difficult environment. Boxing became more than a sport, it became his escape route. His talent was obvious from a young age. With incredible defensive skills, speed, and discipline, Mayweather quickly became one of the most promising fighters of his generation. After winning a bronze medal at the 1996 Olympics, he entered the professional boxing world determined to prove that he was different. And he did exactly that. Unlike many fighters who depended heavily on promoters and traditional boxing systems, Mayweather eventually decided to take control of his own career. That decision changed everything. By promoting his own fights and negotiating his own deals, he positioned himself to earn a much larger share of the money generated by his performances. The result was a financial transformation rarely seen in sports. Major fights against opponents like Oscar de la Hoya, Manny Pacquiao, and Conor McGregor turned Mayweather into one of the highest-paid athletes on the planet. His 2015 fight against Pacquiao became one of the biggest sporting events in history, generating hundreds of millions of dollars in revenue. Then came the fight against McGregor in 2017, another massive financial success that pushed Mayweather's career earnings even higher. With each event, the Money Mayweather persona grew stronger. But as his wealth increased, so did public fascination with how he spent it. Mayweather regularly showcased his lifestyle on social media, displaying enormous cash collections, luxury vehicles, expensive jewelry, and lavish vacations. For many fans, it was entertaining. For others, it raised questions about whether maintaining such an image came with a hidden cost. Because when someone appears to have unlimited money, people naturally start wondering how sustainable that lifestyle really is. Behind the photos of wealth and success was a complicated financial reality. A fortune built through boxing, endorsements, investments, and business decisions still required careful management. Even the richest celebrities in the world face risks, changing markets, and unexpected financial challenges. And this is where the controversy surrounding the reported $500 million loss begins. When reports started circulating about a possible massive financial setback involving Mayweather, many people were stunned. How could someone who earned hundreds of millions and built an entire identity around being wealthy suddenly become associated with losing such an enormous amount of money? The headline alone was enough to create a storm. But the real story was not as simple as a single number appearing in a report. To understand what happened, it is necessary to look beyond the image Mayweather created and examine the complicated world of celebrity finances, where public appearances and private realities often tell very different stories. Because the biggest question was never just how much money Mayweather made. The bigger question was whether the fortune everyone believed they understood was actually the complete picture. And that question would become even more important when a controversial report brought Mayweather's finances back into the spotlight and started a debate that would divide fans, critics, and financial observers around the world. When a report connected to Floyd Mayweather's finances began circulating, it created the kind of reaction that few celebrity stories can generate. The number attached to the discussion was almost impossible to ignore, a reported $500 million financial loss. For a man whose entire public identity was built around wealth, success, and financial dominance, the claim immediately became a major talking point. Fans who had watched Mayweather flaunt his success for years suddenly found themselves asking a question they never expected to ask. How could someone known as one of the richest athletes alive experience a loss that massive? The answer, however, was far more complicated than the headlines suggested. Large financial figures connected to celebrities often attract attention because they create an immediate emotional reaction. A number like $500 million sounds like a fortune disappearing overnight. It creates images of failed investments, reckless spending, or a sudden collapse. But in the world of high-level finance, numbers are rarely that simple. A reported loss does not always mean someone's bank account suddenly dropped by that exact amount. Wealth can exist in many forms: businesses, real estate, investments, partnerships, assets, and future earning potential. The value of those things can rise and fall depending on market conditions, business performance, and outside circumstances. Yet headlines often remove that complexity. Instead, they leave audiences with a simple question: did Floyd Mayweather really lose $500 million? That question spread quickly because it challenged the image Mayweather had spent years building. His brand was based on confidence, control, and financial success. He often presented himself as someone who understood money better than anyone around him. The idea that he could suffer a loss of that magnitude seemed almost impossible to many people. But there was another reason the story gained attention: Mayweather's history of publicly celebrating his wealth. Unlike many wealthy celebrities who keep their finances private, Mayweather turned his money into part of his entertainment value. His watches, cars, mansions, and cash displays became part of the character he created. The lifestyle was not just something he owned. It was something he promoted. And that meant any financial controversy involving him would naturally receive even more attention. Critics argued that the report showed the dangers of extreme celebrity spending and questioned whether maintaining such a public image could eventually create problems. Supporters, however, pointed out that Mayweather's business success and career earnings were far more complicated than a single controversial figure. They argued that judging his entire financial situation based on one reported loss was misleading. The debate became larger than just Floyd Mayweather. It became a conversation about how people understand celebrity wealth. Many people assume that athletes and entertainers with enormous incomes automatically have endless financial security. But behind the scenes, even the wealthiest individuals face decisions involving taxes, investments, business risks, and changing markets. A person can earn hundreds of millions and still experience major financial setbacks. At the same time, a reported loss does not automatically mean financial failure. The missing piece was understanding where that $500 million figure came from, what it actually represented, and whether it reflected a true loss or something completely different. Because the deeper investigators looked into Mayweather's financial world, the more they discovered that his money story was not just about boxing earnings or luxury spending. It was about a much larger empire built over decades. And hidden inside that empire were the business decisions, investments, and financial moves that could completely change the way people viewed the controversy. The biggest mistake people make when looking at Floyd Mayweather's wealth is assuming that his fortune came only from boxing. Yes, the ring made him famous. Yes, legendary fights created some of the biggest paydays in sports history. But the money that allowed Mayweather to maintain his lifestyle came from something much larger than punches, titles, and championship belts. It came from understanding business. Throughout his career, Mayweather repeatedly showed that he was not only interested in winning fights, he was interested in controlling the financial opportunities surrounding them. His decision to move away from traditional boxing arrangements and build his own promotional company became one of the most important choices of his career. By creating Mayweather Promotions, he gained more control over the business side of boxing, allowing him to become involved in promoting events rather than simply being the fighter who stepped into the ring. That change was significant. For many athletes, the biggest payday of their career comes when they compete. But Mayweather built a system where his earning potential extended beyond the fight itself. Every event represented not only athletic competition but also ticket sales, pay-per-view revenue, sponsorship opportunities, and global attention. This approach helped transform him from a highly successful boxer into a brand. However, Mayweather's financial world also involved investments and ventures outside boxing. Like many wealthy athletes, he explored opportunities in areas such as real estate, entertainment, and business partnerships. These types of assets can create enormous wealth, but they also come with risks that are not always visible to the public. A mansion, for example, may represent luxury to fans watching from the outside. But financially, property is also an asset that requires maintenance, taxes, and careful management. The same applies to businesses. A company can be worth millions on paper but still face challenges behind the scenes. Investments can lose value. Markets can change. Partnerships can succeed or fail. For someone with a large portfolio, financial movement is normal. But when that person is one of the most famous athletes in the world, every financial change becomes a headline. This is why the reported $500 million loss created such a strong reaction. Many people focused only on the number, but they overlooked the fact that Mayweather's wealth has always been connected to multiple sources. His financial story was never simply boxing money in, money spent out. The reality was far more complicated. There was also another factor that made Mayweather's finances difficult for outsiders to judge: privacy. Despite openly showing parts of his lifestyle, the complete details of his financial situation have never been fully available to the public. Fans see the cars, watches, and vacations. They do not see every investment decision, every asset, every business arrangement, or every financial strategy happening away from cameras. That gap between what the public sees and what actually exists behind the scenes created the perfect environment for speculation. Some people saw the controversy as proof that Mayweather's spending habits had finally caught up with him. Others believed the headlines ignored the bigger picture of a businessman who had built multiple streams of income. And as the debate continued, one uncomfortable question remained. Was Floyd Mayweather's wealth actually disappearing? Or were people misunderstanding how wealthy individuals measure success and loss? To answer that, the next part of the story takes a closer look at the lifestyle that made Mayweather famous, and why the same image that helped build his empire also became the reason so many people questioned his financial future. For years, Floyd Mayweather's lifestyle was almost as famous as his boxing career. Long before people debated his finances, the world already knew the image he wanted to project. A man surrounded by luxury, confidence, and unlimited success. The private jets, the designer clothing, the diamond-covered watches, the collections of exotic cars, the enormous displays of cash. Everything about Mayweather's public image was designed to send one message. He had reached a level of wealth most people could only imagine. But that same image eventually became one of the biggest reasons people questioned his financial decisions. When celebrities display extreme wealth, the public often assumes they understand the full picture. Fans see expensive purchases and naturally wonder how much money is being spent, how much is being saved, and whether that lifestyle can continue forever. With Mayweather, those questions became even louder because spending was not something he tried to hide. In fact, it became part of his identity. The nickname Money Mayweather was not simply a nickname given to him by others. It became a carefully built brand. His wealth was part of his personality, his marketing strategy, and the entertainment surrounding his career. For many fans, it was fascinating. They watched as Mayweather showed off things that seemed unreal: luxury homes, rare vehicles, expensive jewelry, and experiences that represented the highest levels of success. But critics viewed the same displays differently. They argued that constantly promoting a lifestyle based on extreme spending could create pressure to maintain an image regardless of the circumstances behind the scenes. They questioned whether the cost of appearing wealthy could become a financial burden itself. This is a challenge many celebrities face. Fame creates expectations. Once someone becomes known for a certain lifestyle, stepping away from that image can be difficult. Fans expect bigger purchases, more expensive vacations, and constant displays of success. The person behind the brand can become trapped by the very image that made them famous. For Mayweather, this created a unique situation. His lifestyle helped make him one of the most recognizable athletes in the world. The money persona attracted attention, increased his marketability, and helped turn his fights into global events. But it also meant that every financial rumor would receive more attention. A normal business decision might go unnoticed for another wealthy individual. For Mayweather, every investment, purchase, or financial headline became part of a larger public conversation. However, there is another side to the story that many people overlook. A person spending money does not automatically mean they are financially irresponsible. Wealthy individuals often spend large amounts while also owning valuable assets and generating significant income. The real question is not simply, how much does someone spend? The real question is, how much wealth remains after everything is considered? That distinction became extremely important in the debate surrounding Mayweather's reported $500 million loss. Because while critics focused on the luxury lifestyle, supporters pointed to something else: the businesses, earnings, and financial moves that existed beyond what cameras captured. The controversy was not only about money. It was about perception. The world knew the character of Money Mayweather. But did people truly understand Floyd Mayweather's financial reality behind that character? And as more voices entered the debate, from fans to financial commentators, the conversation became less about what Mayweather owned, and more about whether the public had misunderstood what wealth actually looks like. Once the reported $500 million financial loss connected to Floyd Mayweather began circulating, the reaction was immediate. Fans, critics, and financial commentators all tried to interpret what the number actually meant, but they arrived at very different conclusions. For some people, the headline seemed to confirm a warning they had been making for years. They pointed to Mayweather's famous displays of wealth and argued that a lifestyle built around constant luxury spending could eventually create problems, no matter how successful someone becomes. To them, the story represented a familiar pattern seen throughout celebrity culture. An athlete or entertainer earns an enormous fortune, becomes known for an extravagant lifestyle, and eventually faces financial difficulties when the money starts moving in the wrong direction. But others strongly disagreed. Supporters of Mayweather argued that the conversation ignored the bigger picture. They pointed out that someone with a career filled with historic earnings, business ventures, and investments cannot have their entire financial situation judged by one number appearing in a report. They believed the controversy was another example of the public misunderstanding how wealthy people manage money. The disagreement revealed something important about celebrity finances. People often confuse income with wealth. To many fans, earning hundreds of millions of dollars means someone should never experience any financial problems. But experts often explain that wealth is not just about how much money comes in, it is also about how assets are managed, how risks are handled, and how decisions affect long-term value. A billionaire can lose hundreds of millions in an investment and still remain wealthy. A person can earn a massive income and still struggle financially if expenses, taxes, and poor decisions outweigh earnings. The numbers alone do not tell the entire story. This is why the debate surrounding Mayweather became so intense. His public image created a situation where people already had strong opinions before examining the details. Those who admired him saw the controversy as unfair criticism of a successful businessman. They believed his achievements were being ignored because a negative headline attracted more attention. Those who criticized him saw it differently. They argued that Mayweather's public celebration of wealth invited public discussion when questions about money appeared. The debate also highlighted the complicated relationship between celebrities and their audiences. When someone shares their success publicly, fans often feel like they understand that person's life. They see the homes, the cars, the vacations, and the victories. But what they usually do not see are the private decisions happening behind those moments. They do not see financial planning meetings. They do not see investment strategies. They do not see the risks taken behind closed doors. This gap between public perception and private reality is where rumors often grow. And in Mayweather's case, the gap was enormous. He had spent years creating one of the strongest financial brands in sports history. He was not just known as a boxer who earned money. He was known as a person who represented money itself. So when a story suggested a massive financial loss, it created a contradiction that people struggled to understand. How could the man who taught the world about wealth suddenly be associated with losing an amount that most people could never earn in a lifetime? But the most important part of this controversy was not the debate itself. It was the question hiding underneath it. What does a reported loss actually reveal about someone's financial condition? Because when experts look beyond headlines, they often see a much more complicated picture, one where losing money and losing wealth are two completely different things. And understanding that difference may be the key to finally understanding what really happened with Floyd Mayweather's reported $500 million loss. The biggest misunderstanding surrounding the Floyd Mayweather financial controversy comes down to one simple idea. Losing money and losing wealth are not always the same thing. To most people, a reported loss of $500 million sounds like a disaster. It creates an image of someone watching their fortune disappear overnight. But in the world of high-level finance, the reality is much more complicated. Wealth is not always sitting in a bank account. For people with enormous fortunes, money is often spread across different forms of assets. These can include businesses, property, investments, partnerships, and other financial holdings. The value of those assets can change constantly depending on markets, business performance, and economic conditions. A person can technically lose hundreds of millions on paper without actually losing everything they own. For example, if someone owns a company valued at a certain amount and that valuation drops, their net worth may decrease even though they still own the company, still generate income, and still control valuable assets. This distinction is extremely important when discussing celebrities and athletes because public conversations often focus only on the biggest number. The public sees the headline. Financial experts look at the structure behind the headline. That difference changes the entire conversation. Mayweather's career was built around generating enormous revenue, but it was also built around making financial decisions. Like any major entrepreneur, those decisions involved opportunities and risks. Some investments succeed. Some investments underperform. Some assets increase in value. Others lose value. That process is normal for anyone operating at a high financial level. However, when the person involved is someone as famous as Floyd Mayweather, every financial movement becomes a public event. The reason is simple. Mayweather turned money into part of his identity. His success was not hidden away. It was displayed, discussed, and marketed. That created a connection between his reputation and his financial image. So when a negative financial story appeared, people did not just see it as a business issue. They saw it as a contradiction. The man known as Money Mayweather was suddenly connected to a massive loss. And that contrast made the story impossible to ignore. But the deeper lesson from the controversy is that wealth is not measured only by how much someone earns or spends. It is measured by how someone manages what they have. Many wealthy individuals experience financial setbacks without losing their overall position. The difference often comes down to whether they have multiple sources of income, valuable assets, and the ability to recover from losses. And this is where Mayweather's story becomes more complex. His boxing career created historic earnings. His business ventures expanded his opportunities. His public lifestyle created worldwide attention. All of those elements exist at the same time. The same brand that made him famous also created expectations. The same spending habits that entertained fans also created criticism. The same business risks that can create enormous rewards can also create significant losses. The controversy was never simply about a number. It was about how people interpret success. Because behind every headline about a celebrity fortune is a much larger story about choices, risks, and the reality of maintaining wealth at the highest level. And as the discussion surrounding Mayweather continued, one final question remained. After all the rumors, reports, and debates, what does this controversy actually reveal about Floyd Mayweather's financial future and the legacy of the money persona he built for himself? For years, Floyd Mayweather has represented one of the most fascinating stories in sports history. He went from a young fighter chasing a dream to one of the highest-earning athletes the world has ever seen. But the controversy surrounding the reported $500 million financial loss revealed something even bigger than a number. It revealed how complicated fame, money, and perception can become when they all exist under the same spotlight. To the public, Mayweather's identity has always been connected to wealth. The nickname Money Mayweather was more than a marketing strategy. It became a symbol. It represented confidence, success, and the ability to turn athletic talent into financial power. But behind that image was a businessman constantly making decisions. Some decisions created enormous opportunities. Others carried risks. And like every entrepreneur operating at the highest level, Mayweather's financial journey was never a straight line. The controversy forced people to look beyond the luxury cars, expensive watches, and famous lifestyle. It pushed fans to consider something they often overlook: the difference between appearing wealthy and understanding wealth. A public image can show what someone owns, cannot always show how their financial world is structured. This is why the debate became so divided. Some people viewed the reports as proof that Mayweather's lifestyle was impossible to maintain forever. Others believed the discussion ignored the bigger picture of a man who had built multiple income streams and created a brand worth far more than just his boxing earnings. Both sides focused on different parts of the same story. One side saw spending. The other side saw strategy. One side saw risk. The other side saw opportunity. And somewhere between those perspectives was the reality. A financial journey filled with victories, challenges, and decisions that most people will never experience. Perhaps the biggest lesson from the Mayweather controversy is that extreme wealth comes with extreme complexity. The higher someone climbs financially, the more complicated their decisions become. A single headline can never fully explain an entire empire. For Mayweather, the story was never just about how much money he made. It was about how he built a machine around his name. It was about turning boxing success into business success. It was about creating a public identity so powerful that even rumors about his finances became global news. And that may be the most interesting part of the entire debate. The same Money Mayweather persona that made him famous also created the expectations that followed him. Every purchase, every investment, and every financial headline became part of a larger conversation about whether the man behind the brand could continue maintaining the image he created. So, did Floyd Mayweather really lose $500 million? The answer depends on how that number is interpreted. A headline can create shock. A number can create debate. But understanding the full story requires looking deeper than the surface. Because the truth about wealth is rarely found in the biggest number on the screen. It is found in the decisions, the strategy, and the hidden details most people never see. And perhaps the final takeaway from Floyd Mayweather's financial controversy is this: the world thought it was watching a story about money disappearing. But the real story was about how difficult it is to measure the fortune of a man who turned money itself into his greatest performance.